Hey everybody, welcome to the podcast. Today we got Jeremy Winn back on the podcast. It's been a little while. We had some downtimes with a lot of the ice storms and power outages, and things were just crazy. But we're back, and we had a great talk about the legacy markets and crypto markets and how they go together and how they don't. And it was a good one. So, just give you the brief rundown. This is not financial advice, so any decision that you make off of what we say in this podcast is for your own decision. It has nothing to do with what we said. We're not telling you to buy, sell, whatever. This is for educational purposes only. So, don't get angry if you buy something that goes down, because that's what happens sometimes. Anyways, hope you enjoy the podcast, and give us a like and some thumbs up. Hey everybody, it has been a while, but this is Venue Ventures with Jeremy Winn and Nate Harper. We've had a lot of things that have happened since the last time we did a podcast.
Yeah, it seems like a lot of the ups and the downs of the market have happened since last time we chatted.
Well, and I'm just talking about the fact that we've had a ginormous ice storm that took everything out, and we were, I was out of power for 5 days, and I ended up going over to Bend and staying with some family over there, and it was crazy. I think people are still out of power in some areas right now. So
yeah, it's weird how much of life is dependent upon electricity, or even the internet and whatever. It's more uncomfortable nowadays looking at analog TV or going through. We got an antenna for our TV just to get some type of entertainment because our TV is run through the internet, and so it kind of made I guess the whole Elon Musk Starlink thing become more of a necessity. I would say a need.
Oh, yeah. I'm on the list. I've got my name. I put my $99 down. So apparently I'm supposed to see it like summertime, supposedly. So.
Well, I was reading something that the beta tests on that are rolling out. So it seems like a pretty good little deal all around.
Yeah, I just read one about Maine, the mainlanders or whatever over there. I guess it's not so good for them.
No.
They're complaining. There's too many blips where it just drops out. So
it's kind of like satellite TV. So, yeah.
Well, it's not. They don't just have one satellite. They got hundreds, thousands, or however many satellites are up there, and they're shooting more all the time. That's the coverage. As it grows in the next 10 years, there's not going to be anywhere you can't get it. It'll be constant.
Well, satellites are everywhere. It's just mind-blowing sometimes to think about all the amount of orbital things that we have, including aliens.
Oh, we can talk aliens this time?
Yeah.
I'm loving it. All right.
Start
What's new? I haven't been keeping up on the alien talk.
Yeah, no, I don't either. So it's ignorance is bliss in my mind. So yeah, I think what I primarily look at for what's gone on besides the ice storm is just the overall continuance of what the markets have done. I mean, we've certainly experienced some great ups from the start of this year until now. Some pullbacks, and I don't know, from the start of the year till now you're looking at,
well, the DAC, it peaked out at, what is that, 14.26 something, 14.265, and we dropped down about 13%. The tech sector got nailed.
It's still getting a little bit hammered right now, but
look at. I expect that though. Like, you had a huge upside from Friday, right? You have this. Look at this candle down here. It just ripped off of the 50. Tons of buy volume. Brought that sucker back up. So you got to have a little cool down. Usually you're not going to get that rip back up. We'll see this afternoon too, though. This is just that kind of sell off from everybody buying last week, and then just kind of move itself back up. I don't see us retesting those lows anytime soon. So,
well, it's just the part that gets me is just the overall over exuberance that it seems that we had from the start of the year, and we were highlighting that, I think, through January and into parts of February, how the growth was just unsustainable. It was something that was amazing to me to see.
Yeah.
If you look at the overall NASDAQ numbers from the start of the year until now, I think we're down like 1% from the start of the year until now. And so...
From the start till now?
Yeah, from January
yeah.
1
Sorry.
till now, you're looking at, we're down 1% from that time frame till now in the NASDAQ. And so,
Yeah, 1.25.
but we were up how much percent from the start of the year till the high point? I think we were looking at what, 14% then growth from in less than a 2-month time frame.
Probably.
So it was like a month and a half growth. We were up 14% or something like
9%.
9%. Okay.
Yeah. Still,
That's in a month and a half time frame going up 9%. It's just, it's not realistic. So these pullbacks, these adjustments, these changes, you look at that run from what, November 4th, I want to say.
Yeah, November 2nd was right here. This is that other big candle coming off of this, that buy candle. Let's just look at that week. This is on the weekly. So, but damn, it just went up, in a week, 8% in a week.
Yeah.
And at that point in time, up to there, I mean, you're looking at 30% from November 2nd. So from November until now, 30% to the top, and then we got a little pullback, but
yeah, I mean,
you need it.
You have to have those type of adjustments, a pullback, correction. I don't know how. I know the percentage determines what it's actually called. I think it went over the 10%, so that's what they would call a correction. It's all part of the healthy market. I tend to be a little bit more optimistic on the NASDAQ just based off the fact that the technology, it's heavy tech, and technology is the future of how we operate. Now, certainly there are some other sectors that I'm currently in that are experiencing some growth or some, basically people are pulling their money from the tech and putting it into the, your financials and your oils and your other types of indexes there, or
apparently
areas.
A lot of people are putting it into bonds. Apparently the bond market, that's hot.
If you want 1.5%, so it won't even pace with the current projected inflationary rate, then you put it into bond. But for a lot of people that are in the the fixed income avenue, that's what they're looking for. For me, I look at stuff, if we're down 1% right now from the start of the year, and we've got what I feel is some decent news coming out about the opening of the overall economy. You've got stimulus continuations that we're voting on, or that they're voting on in the House, or that they're going to be voting on in the House. They're looking to implement by the 14th probably. I just tend to be a little bit more optimistic in the near term to the end of this year time frame. I think that the NASDAQ will more than likely not be a negative number for the year. So from January 1 to December 31st, 2021, I don't typically feel like it's going to be a negative number. But, I mean, it could be wrong.
Wow.
I just tend to think that there's too much stuff that's brewing behind it.
Well,
You're going to pop the balloon.
I'm going to pull up my,
your predictor sheet?
My my NASDAQ that I've been looking at for, 8 months now.
This is where the real wizardry happens.
This is it. This is going to happen right here. This is, this is written in the books, right? So, I was looking at this weekend too, and I was trying to find the article that I had read, or I can't remember, maybe it was a tweet storm or something, and the guys were talking about the amount of money that was put in to the markets during the .com bubble.
Yeah.
This is what started me on this whole chart of the NASDAQ here, and I was like, interesting. So, they compared it to the amount of money that is being printed and put into the market now, between 2020 and now. Well, they talked to 2018 because we've been printing money for a while, but
yeah,
really it came to fruition last year with all the money printing. So I looked at it and I said, okay, because they compared it to the GDP and the percentage of GDP. There's way more money printed now and put into the markets than there was in during the .com bubble. But in terms of GDP, the percentage was very close, like within 1% of the amount that was put in there. So I was like, oh, that's interesting. So I charted it up, just kind of looking at the similarities, and they're strikingly similar. Strikingly similar. You look at this circle in here. It's just the consolidation period. You get your trend line that gets broken, and a little bit more of a consolidation, right? Well, we got the consolidation period, and then the major money print and just money inflow was ridiculous in the late 90s, right?
Yeah.
And that's the same thing that we're seeing here, right? You kind of have this consolidation, and then you have the ridiculous money inflow right after a big dip into the markets and then it breaks the trend line, and we have a little consolidation going forward. So I did the little map of
if this, then this type of thing.
Yeah, I just kind of copied this. Yeah, it's not going to go, to
it's
the
fun maps. The fun maps.
It's the fun maps, exactly. And you can kind of see like, oh, what's it really look like? Well, if you map it out and you put it right next to it in the same sense, and you get the same type of growth, if the money keeps printing and they keep putting it into in the markets, well, they don't put it in the markets, but people do.
Yeah.
Then this would be what we see. It would be a decent growth for the NASDAQ for the year. I think from current price to the end, to this peak, which interesting enough lines up with fib levels. Like, and fib levels are, amazing when you're looking at trying to find the next consolidation areas and stuff like that. So when we look at that, I mean, it's only 83% for the NASDAQ for the rest of the year. That's all.
From the current levels.
From the current levels. Yeah. Now, this is all
an exact science. It's an exact science. Don't even question it.
Sorry, you're right. I consulted my tea leaves.
Yes.
And they told me this shall happen. So,
but, I mean, even if you're talking about a halving of that type of performance, if you had a 40% growth, again, I don't know how many years in a row that would be for something similar to the VGT, a 40% type of growth. I think we've had 2 consecutive years of over 40% growth on VGT, which typically tracks the NASDAQ on the index side of things for a Vanguard fund.
Yeah.
That type of growth in a year, it's unprecedented, unheard of. And it is something that I feel I'm optimistic about it. I think it's possible, but I don't know. It's one of those things. Each person has to make their own assumptions on what their investments are going to be. I think it transfers out through all the other markets that are out there. I think there's a lot of pent up demand for.
Oh yeah, like you said. I mean, even Oregon is opening up.
Yeah.
Even Oregon, schools are starting back up. Yep. Sort of. We've got restaurants that are opening up.
Yeah.
Everything except for like your contact gyms.
Yeah.
Are getting a little bit hosed still, but. I mean, that's a huge markets. I mean, these people are coming back. Money's going to be spent. It's going to be put back out there. We have, I think we've had 50 some odd days in a row of decreased hospitalizations from COVID.
Yeah.
And we're below the peak of
new cases.
Yep. That we hit twice. It was kind of like a double top, We kind of hit these. I chart everything.
Yeah,
it was kind of like a double top where we hit the peak cases. It was in March, obviously, or April, and then it came through in the summertime. We kind of had that second wave, and then we had the big one that came through. But we're well below it now, and we've got Johnson & Johnson with the third vaccine that's approved that was rolled out I think last week.
Yep.
It's just going to keep getting better in that sense of things. So far.
Yeah, well, and when you see numbers like it's consumer savings is at its highest point that it's ever been in the near future.
Time to spend it.
Yeah, there's people that are going to want to spend.
We don't save in America. No. We spend in America.
That's how the economy works. You can't make more money until you spend more money. That's the way that it works. So you've got to.
This is true, and you can't get credit unless you actually have credit to go with it and spend money to get credit, and I learned that the hard way.
Yeah, it's interesting how the overall economy works, and I'm bullish more on the trad side. I probably have I don't know what my current levels are. At one point in time, it was probably 12% was in crypto, and the remaining 88% is in the trad markets, and I think that might be flop for you. I don't know for certain, and then. There's various people along the way I think that are in the realm of things. I don't honestly think that there's a wrong move right now for people that are looking to just sit and be in the markets in either side.
Yeah.
But I would tend to say that based on my tea leaf reading skills, that this last Friday, I was looking at the stuff and everything looked to be on sale, and it was almost as soon as the vote happened. In the Senate, or they were talking about doing the vote in the Senate, everything just kind of turned around.
Yeah.
And it was an unprecedented day in my mind, and it carried through the weekend. And I think today we're going to see kind of some hiccups a little bit on some things, but other things are going to pump. You're looking, I could see right now some of the financials there with DPST. The oils I think are pulled back a little bit. I don't see that up on the screen there, but I think that they're down a little bit. But
Just UCO is down a little bit. Oxy, I think I have on here. We'll just look at U.S. oil.
Well, crude is down like a 1.27, but the price is at $65 a barrel.
Right.
You know, that was down around. You remember
look
last
at it here?
year?
Yeah, right here. So
it
in
went
January.
negative.
Well, yeah. Look at that. I mean, I have to shoot the chart up. So you have to get rid of that wick. I remember that time. It was like, how's this happening? And people were like having to like pay for storage of their barrels. I don't know. It's some weird. I don't do futures. Not my thing.
No, but when you talk about OPEC's recent meeting and the Saudis are looking at continuing their restriction of 1 million barrels of oil a day, it's going to decrease the overall supply. It's going to drive that pricing up. So you're talking about a lot of the cyclicals, a lot of the stuff that really took the hammering is going to continue that growth. I think the tech's going to have that rebound. But
oil's at the high that it was back in December of 2019, and it hit it in April 2019. So we're at that same spot.
Yep. And we got a Democratic president now, so that means that oil pricing is going to go through the roof.
Wait.
If you look at that trend, you can
What are you talking about? No, wait. I thought it was green energy.
No.
Isn't oil's green now?
No,
coal's green. Coal is green. I don't know how that works.
I would tend to say that, and this is a completely non-scientific way of looking at things, but you look at Republican presidents, the Democratic presidents, you can see that the gas prices typically, or the oil prices typically go up during that time frame. And now I don't know how much you can really blame or attribute to the COVID because nobody was using any oil, and so supply was up, demand was down, those types of things. So it's tough to really say how much of that was accurate on the overall pricing of things. But, for riding along in that time frame, I think we still got some room to run, I think, on the pricing. I think most of your oil companies now with the barrels above $65, they got to be above 50, I think, in order to be profitable for most of the West Texas type of stuff. And so
we're in that range.
We're in that range. I think that it's going to be good for a lot of the businesses all around. But like I said, across the board, if I were to look at the laggards that would be from the last year, you were looking at, I think in January you could still get some of the oils for pretty inexpensive. And now I don't know that there's the sales in the oils. Oxy, I mean, obviously that one dipped down to like $10, I want to say, recently.
It was at $10. Back in November.
Yeah,
November we were down in there.
Well, I say recently. So November was what?
Not in the markets anymore.
Okay.
That's long term.
Okay.
That's long. I don't know if you got the note. So anything that's over a month is now long term holds.
Well, that's to be expected. I mean, that's in any of them, right? If you are long term in in the trad markets, if you're long term in crypto, you're holding it for more than a month. It's just the tax implications just haven't quite caught up to that mindset yet. If we could only get long-term capital gains to match up with that month time frame, then people would really make some money.
I think we should just get rid of short-term capital gains and all trading. That would make me happy. But I don't know. Oil looks good. Everything's just kind of there. We had that dip last week, and I didn't have any cash on the sidelines. I was already invested in everything, and I could have margined some stuff out, but I wasn't looking to. I had been basically just doing a crap ton of trading and stuff in the crypto markets the last, month or two.
Yeah.
Beginning of the year. And that took a lot of mental effort out. Actually, the ice storm was nice for me. It kind of gave me a break to kind of take a step back and realize, like, hey, slow down. You did good. Now enjoy it. Just take a little break. So I don't know. I'm looking at a few things. I moved a couple stuff around. I'm not looking to get anything yet in the legacy markets.
Yeah.
I might get into a couple IPOs coming out.
Oh.
One's a crypto one, obviously Coinbase.
Yeah.
Ride the hype.
Yeah.
I'll probably just ride the hype, see where it's going to go. It's a big one. I'll probably base my amount I put into it depending on where Bitcoin and the overall crypto market cap crypto market is compared to when I don't even know when they're going to come out.
Yeah.
I don't think it's been set yet. But that'll be an interesting one. The other one that's coming out this week is Roblox. I don't know if your kids play Roblox at all.
I'm not familiar with it.
So Roblox is a game, and they're a gaming company. They actually have the ability to make games internally through. They have a lot of developers that'll make different games through their game. It's My kid plays it. Like a bunch of his friends play it. It's been around for a while. I don't play it at all. Yeah. But they're doing a direct listing on the NASDAQ.
Oh, nice.
I think with the pump that we were coming off of these lows going into it, and I think it has a lot of hype around it. I might play it a little bit and see where it kind of goes. I think it's going to open up at 45 supposedly right now, so that means it'll open at 450.
Yeah, exactly.
For us, but
well, yeah, for the common people that don't get the pre-market price, a lot of that hype gets already put into it, and you can almost buy in a week later for a discount. You know, your 30-40% type of discount.
Yeah, I think we got Roblox here. So low price 45. Yeah, so they're looking at 45 right now.
Yeah.
For the opening of it.
Oh, underwriters are your typical banks there, so they're going to make the money. So.
Oh, of course. Somebody's going to make the money somewhere. That's how these things work out. I'm not a huge IPO fan though.
No.
Usually you watch them, they come out, they might get a quick little jump, and then they puke everywhere.
Yeah.
And then once you see that consolidation afterwards, then get in them. I mean, we got into a couple of them like Smile Direct Club, Chewy.
Chewy I got into, I bought and held, and it went down like 40% from the time I got in.
Now you're up like 300x or something
it's
crazy.
over like 200% in a 2-year time frame. But it's one of those things, it's time frame is... length of holding is always the benefit of the investor. And so, you look at that. I bought in at 37, I want to say.
Well, you bought in at the IPO.
Yeah.
It's right here. So, but then, this is on the weekly. So this is the weeks following, you have this trend down.
Yeah.
You have a bounce up and then some, consolidation going across in this general direction, right?
Mm-hmm.
And then you see that rip down in March with everything.
Yeah.
But then everything with Chewy being an online company, that would have been, I did not get into the online companies like I should have overall. But Chewy obviously was a great one. I mean, what do you got here if you're 37, you're sitting, you're a little over double at the peak. You're 200%. So
yeah, it was up there 200. And honestly, this little pullback now, even more of a pullback, it doesn't really do that much to me as far as move the needle of wanting to make a sale on it.
I'll tell you what it does. It gets me a little excited. I might look at entering into Chewy here. If I'm looking at where it's currently at, I don't know I like that. Look at that. Right off of that support, right off of this wick up. I don't know. I kind of like it. I kind of like Chewy. Good little correction spot for it. It's not going anywhere. It's going to do great.
It is. I think a lot of the structural stuff of it as far as ownership has worked itself out. Those early people that adopted, I think the Petco or PetSmart ownership stake has been reduced enough on it. But I currently use it. I like it. It makes buying food affordable for the animals and stuff like that. But I don't know. And Smile Direct Club was a result of I was in a line for the longest time, and I saw that Smile Direct was going to be a direct competitor of it. And I think we got in, $5 or something like that.
Yeah, we're in pretty low on that one.
So it's doing kind of its little ride around. That's another one, too. It's, with those types of things, they're expanding their operations. I see their advertisements on TV. You got the Walmart partnerships.
I don't even watch TV, and I saw one. I was like, oh, that's kind of cool. So
I think it still has some potential to make some moves too. I don't know. It might not do much more besides where it's at right now, but
I think you got consolidation across this way. I mean, to say something's going to stay sideways in what we think the market's going to do this year. If it stays sideways, it must be a dead company. Literally, it must be a dead company because.
Well, and it's not even back up to its IPO price. Of 21 or whatever. So it probably. I would think to be fair to the company, it probably would get to at least the IPO price in a year time frame.
Yeah, I like it. It's in the cloud on the weekly, which is supposedly a no trade zone. But I like this dip across the board. This would be a really good one to look at. I might look at it on my personal side maybe, but that would take away all my crypto holdings. So I don't know if I want to do that. We'll see. I like this though too. You can see this 13-14 range. It's been a wick in. You're going to look at possibly a rising wedge coming into this and then take off. So our entry will look nice probably by the end of the year on this one, and we'll be happy with it. So
with all of them, it's just always an evaluation on. I just can't see pulling out legacy or the traditional markets based off of the fact of, the last week or 2 week time frame of a correction or a pullback. I think most everything has some healthy run potential right now. I can't really. Can you think of something that's looking like it's going to continue a downward trend beyond where we're currently at? Beyond, let's say 20% more downfall from where we're currently at
the dollar.
The dollar, okay.
It's and only because it's. I mean, I think what we have. I had this up earlier, but ultimately, what the dollar is doing, obviously, when you print a bunch of money, the dollar loses value. I mean, it's just it's going to happen, right? So, but what we're seeing here is, in my opinion, people trade it, whatever. I think the dollar is a. I don't think the indices, their legacy market and crypto markets and all this stuff, trade off of the DXY, the dollar itself, meaning that it's a direct relation. I think you're seeing the dollar increase because we had the dips in the markets. People believe different things, but people will trade it, people look at it, and I think we're going to see this dead cat bounce or whatever you want to call it. We could potentially go a little bit higher up here into the 92, maybe the 93 range, and then it's going to turn back over and then roll down. But what I'm saying is that the reason it's going to do that is because your legacy markets, your crypto markets and everything else is going to go, and they're the ones that are going to make it do that. And so make the dollar go down because all the money's flowing into that stuff there. So
do we get that inflation that we're looking for? That
we already have it.
But I know we currently have inflation, but at the level that they're looking for. Like
no, because they're going to tell you what they want to hear. The whole way that they look at their whole inflation metrics is ridiculous. So if you look at
unemployment,
100%, it's kind of like an unemployment. The numbers they give you are there to make you feel a little bit more comfortable. Like, oh look, we're only at 2%, 2.5%, or whatever the heck it was, right? No. Go buy. We've talked.
Go to the grocery
store.
Go to the
grocery store. You know what it is. Go buy anything. You know where the inflation's at. Look at the housing market. Look at everything there. It's there. I think the realized. I've read a couple different things. Are 7% is inflation.
No.
When you look at actual stuff that people buy.
Yeah.
So I don't know. I think it's part of the market, but that's why we talked about before. Get your money into something that's going to grow and it's not going to lose value, because I think what we see is, the way the markets are going to grow, the way the markets are going to push, you're going to see, the 80s again with the dollar, which we hadn't seen since, 2014, and earlier. So that's what I think was going to happen. We have, like I said, a little bit more push up. And then it's just going to keep ripping back down.
So if you expanded that view out for years-wise to maybe more, there you go.
So this is on the monthly.
So the mean is typically would be then around that 94, 97 type of...
I would say kind of right where we're at is in the mean, but we're also below. And again, if you were trading this, if it was and people trade, obviously, currencies all the time. But if you're, trading this, it's below this, it's below the resistance line. It hasn't turned it into support. So, again, that's at 92, 93 mark. We might see it kind of come back up into there, and then I think turn over. And then once you see this this last little spot down there, get that stupid thing off there. In here, right? Once we break that low, because right now we have a higher low, which everybody's going to look at. It's like, oh, that's great, higher low. We want that. I don't think it stays. I think it gets broken down, and that's when we just head lower. And if you look at where the majority, again, if you look at median lines down at this lower part, you're probably going to be looking in this range here, which is 80.
Huh?
But does it hit there? It might wick into it, get low down in there, but then that's going to be the point where, I'll probably look at hedging myself in some other directions once we get there. So
if you're looking at that, our conversation on the trad markets or the legacy markets or whatever, you could basically draw the similarities from what we're looking at right now with the trad markets and just pivot that into the crypto markets, and it would be a similar conversation almost.
100%. And that's what I'm looking at too. The nice thing for me, because I'm heavy crypto, is Bitcoin again kind of led this little turnover. Like they turned over and did their dip, and Bitcoin's been consolidating. The market cap's been consolidating and starting to move up afterwards. And last week you had the huge dip in the tech sector and everything else, and Bitcoin had already done its move, so it's already kind of been there and in that consolidation time frame. So I like that in the sense that there wasn't a huge correlation between the legacy markets and the crypto markets, because before you could literally map it out. One dives, the other one dives.
Yeah, it was almost within a couple days. Like at the BTC,
less than that. It was like within hours.
Yeah,
and this one, it was completely there was hardly. You'll show correlation to it, but realistically, the ratios of it and the prices of it, it wasn't there, which is nice. So, I mean, I obviously have some, lines up here for me that I'm looking at for my next moves up, and I've posted a couple videos for Bitcoin itself. Everybody does. The moment you get to a lower low, or sorry, as you're coming down through here, you get a low, and then you get a lower low, and then it breaks up above it, and then everybody is waiting. They're like, "Oh, we're gonna get this next
head and shoulders type."
Yeah, it's the inverse head and shoulders, and
inverse head and shoulders.
Yeah, they're like, "Oh, it's there," and it's not. You can't. It's not even inverse head and shoulders now. For one, it didn't even get down to the level. It's close enough. The volume action was decent for it, but until it actually breaks the neckline, which is ultimately this top of this green box here, you can't even call it an inverse head and shoulders, right? Right now, we're just waiting for that confirmation of getting above, now, which is the weekly close from yesterday, close above that and move forward. And then it's off to the races, man.
Yeah, there you go.
It'll be a fun one. So,
well, you look at BTC's 70% from the start of the year, so January 1 to now, roughly 70%. And if you were to draw it out from the start of the year till the end of the year, projecting, for people that are heavier in crypto, 75%. Okay.
Yeah, for Bitcoin specifically, 75%.
So if you were to draw that out and get it up to what your green line's there, you're looking at 275%, which is kind of an underperforming year for BTC if you were to look at the averages overall, correct?
Well, that's just the next stopping point. We're not turning over from that. That's not the next bear market. Although there's going to be a lot of people that will.
Yeah.
100K, that's huge. I mean,
that is huge.
Well, you saw the 50K. There's a lot of big name guys that were like, I'm taking some off the table, which they should. They were in it for a long time. Some people got upset about it. And it's like, look, I would too. They were in from a long time ago. Take some profit off the table, and you can see that 50K mark was just, it ripped up above it, back down below it. Just a lot of volume in general. People taking profits, but there's more companies coming in.
Yeah.
There was a beauty product company just over the weekend that they bought Bitcoin, 10 million in Bitcoin, and I think 20 million in Ether. They were the first company that actually bought Ethereum, which is interesting. You just have PayPal just bought a blockchain security company, Curve, which I think they're an Israeli company, and it's basically just going to help the security of them and get their product, their cryptocurrency product out to their people more.
Yeah.
They're supposed to be having the ability to send and receive your crypto this year, which is big for them because then it's a matter of time that it's a payment processor, right?
Yeah.
So then people are going to use it to buy stuff with. So does it make sense in a really volatile market? That's a whole other conversation for another time. But there's just a lot of bullish news, man. A lot of bullish news.
Well, if you draw in the similarities, from the trad side or the legacy side, I'm looking at, you got the stimulus, you got the pent up demand, you got the pent up everything. Mm-hmm. Everything's getting opened. In a similar sense, what you're looking at on the crypto side is you have just more and more institutional buy-in, or what appears to be institutional buy-in that continues.
Right.
And it seemed like it really started rolling once it flipped over the 20K mark, that there was more of that institutional buy-in, but maybe it was a little bit before. You're right. You're 100% right. That's the all-time high. So what does institutions want to do? They don't want to be the first one. They don't want to be the first players. They want to be a close second, right? Yeah. You had a few of them, MicroStrategy, Square, and a couple others that were out there before it broke all-time highs. And then once it did, then you started seeing a whole slew of them coming in. And they were just saying that they were there, obviously buying beforehand. Now, how many people are buying now? It seems like everybody's buying it. Every day there's a new story coming out of this person or this company is buying, or this is the new strategy. I think I saw something last week about an ETF that's a BTC ETF.
Canada released theirs.
Canada,
yep. A couple weeks ago they released theirs. Yep. Their Van Eck put in. I think there's a U.S. one they're going to try and do. I mean, ultimately GBTC.
Yeah.
It's an ETF there.
Yeah, and those are ones that I know that I'm personally invested in, is GBTC, and a couple of the other mixed funds, the Bitwise, and I got the Ethes and what is the other one, the GDLC.
GDLC, yeah.
And so those are kind of the legacy way to get exposed without having to get the overall wallets and going on the I don't know, your Coinbase or your what are the other exchanges that you
Coinbase, Kraken. There's a bunch of them. Gemini, Cash App you can buy. Obviously, there's a bunch of different ones. PayPal.
But if you're looking at drawing your lines out there, you were getting that all situated while we were talking, and your channel that you have developed there.
Yeah, so just a pitchfork running off of this was before you. It was the consolidation after March, really, and then you hit that low. And a lot of these fib levels line up with this high to low, and then vice versa. But if you run it off of that, I mean, it's just ridiculous as it keeps going. Now,
will it run all the way up to, let's see, at the 2022 there, that December 2022 or 2021? Sorry, January 20.
1 million?
Yeah. I mean, there's people out there that are predicting 1 million at some point in time. Is it going to happen by the end of this year?
No.
I don't typically think so, because there's too much. It's a different type of marketplace in my mind, based off the fact that you have people that, when you have institutional investors, they're going to hold, but you have a lot of non-institutional holders of it currently, and they're going to look to cash out all along the way.
Right.
And institutionals are not necessarily going to look to cash out all along the way.
100%. And I think that's what we're seeing in a lot of these dips is you get these, people that are cashing out because they've made some profit, and who's buying it up? Institutions.
Yep.
I mean, GBTC, on a weekly basis, they're buying more Bitcoin than's mined, right? There's only 4 million Bitcoin left to be mined out there. So all the Bitcoin that are out there that are available, less the 6 million that are, missing
dead.
or whatever, dead, they're going somewhere. So somebody's buying them and they're putting them somewhere. And these institutions, like you said, are probably not going to be selling anytime soon. Like they're holders. So what do we see? I like this pitchfork better as a representation where you get your low from 2019 to that peak of 14,000. This obviously is the March anomaly, weird stuff, but it still plays out. It's kind of caught itself back up to where actually if you were to map it out where I thought it was going to go before, we kind of were in the same spot now anyway. So
yeah,
let me take this one off here. But if we were to look at different levels to peak itself out at, the orange level or the yellow level, which is the 14K, but most likely on a bull run, you might rip through it and go up. That would be a more realistic potential, I think, in my eyes, of where we might hit. So,
like the top line of where you might hit
so I have, these two green boxes, and I have the boxes because that's multiple fib levels that line up here. And these other red lines are other fib levels that will probably be some stopping points. So my current trade I'm in is I have a BTC long, and I'll probably take my profits in the 70K range, 70 to 76, and then look at another, 20% discount potentially for another entry, and then move on up to the 100K mark. So, and then we'll see from there, see what happens. So my overall goal for BTC, not goal I should say, but like if all stars aligned and all tea leaves were perfect, it would be 300K this year. So
wow, that's pretty that's a pretty bullish scenario. 6x'er off of where we're at right now.
If the NASDAQ hits 80%, that's an easy move for Bitcoin.
It is something. I find it hard to believe that NASDAQ would hit 80%
Me too.
by the end of the year. And so, if it hits half that, hey, that's fine. If it hits half of your 300 and you're looking at 150, I think there's a lot of happy people out there in the world.
Lots of happy people.
But I look at this, okay, so if we're overall bullish, even after some of these pullbacks that we've seen or corrections that we've seen on both the legacy and the Bitcoin world, or the crypto world, sorry, what do we have to guard against? What is it? Just overall over exuberance that we might have, or belief that we might have in a free open trade market, or in the crypto world as a whole? Is that what we have to overall protect against, or what are we looking at?
So I had this talk with Blackburn, 8 Legs Black. on the Discord, and it was the same thing. Like, you know, what's the next thing going to be? And I have this thesis that I'm building in my head, and this is crazy, but when you have the stock market crash in the 20s, right? It was, you know, people freaked out, right? And you have this long drawn out. It was 20 years until people, it hit its high of beforehand, so where it got back to where it was at before it crashed, right? 20 years, that's a long time, right? That's generations being built inside this concept of, I want to be safe. I want to be secure. You're reading a book now where, you know, invest into bonds, you know, 70% of it's bonds.
Yeah, Intelligent Investor by Graham, and it is something that is hard.
It's not a nighttime book because you'll fall asleep within seconds.
Right to sleep, because that was, up until the 80s, that was the main way to generate and maintain money was through bonds.
But that's what I think was generated off of that 1920s crash, right? So you see this huge, like, generation after generation, and they teach them that. Like, hey, I remember my grandparents had walls of canned food, you know, and they have, you know, there's a prepper's mentality built into these people to make sure that they're safe. And, you know, your funds, your actual money is the same thing. Well, everybody's expecting the same thing to happen, of a big crash that's going to reset the market again and go that route. And I have this thesis. It's ridiculous. Something's going to happen, right? But it's going to be completely different than what people see, because it seems to always be that way. People aren't recognizing what's happening.
Yeah.
And me being in the crypto space, a lot of what you're seeing is the DeFi coming into play. DeFi is huge, like decentralized finance, right? So you have lending and borrowing and margins, and all your banking can be done online. And I've been dabbling in a lot of it, and it's actually really amazing.
Yeah.
But it's so freaking new. It's like the, you know, first website where you click on it and it would take 10. I mean, it moves fast, but like the user, the UI interface, the user interface is real kind of like clunky. It needs to be worked out a little bit better. There needs to be more people using it. But as it develops over time, you know, you're taking away the banks. You're taking away this like giant money generator that's out there that's going to that ultimately is distributing a lot of your fees that you have. You know, you have to have employees. You have to have, you know, a physical building so you can walk in and talk to Bob, your banker, right?
Yeah.
I see this as people are getting ridiculous returns for staking and putting their money in. There's farming. Don't let me explain it because it's crazy. But you farm it, you stake it, you're doing all this crazy stuff, and you're getting unbelievable returns, and some of them are unsustainable, and they change on a drop of a hat, like, you know, 600%, 300%, you know, APY. That's unheard of. It doesn't last. And I've been, you know, you kind of move in and out of it. You know, what's the new one? You move it over there. But the thesis is that's what's going to be the thing that people miss out on. Your 20% gain, which is, yay, that's awesome. I did really good.
It is phenomenal in like a trad side, you know, 20% on a year.
But that's going to be the new normal.
Yeah.
You know, what we talked about before of, you know, I put it into the Van Eck, or well, not the Van Eck, the whatever, you get 7% a year.
Yeah.
You know, and it doubles after that. But that's what people are going to do, and that's where they're at. That's what they've been taught.
Yeah.
But the change and where the money's going to be and people are going to be left behind is because this new, and it might not be DeFi, but it's this new way of creating wealth that's going to be in the multiples, not in the 7 to 10%.
Yeah.
It's going to be in, I got 40, 50, 60% on an annualized basis.
Yeah.
That's what people, and we're going to see this just hyper growth over however long time frame.
The roaring 20s.
Yeah. Right. Is it going to be another 20 years? Is it going to be 10 years? And could it be? Sure. And people won't see it. And the people that are going to be left behind are the ones that are sitting in their 401k of 7%, right? And people are like, well, I still got 7% growth. You did. But everywhere else was getting 20, 30, 40, 50% growth. And the dollar itself, so your dollar power, if it does that, everything else goes up 50%. That dollar that I showed you that was 80, the dollar value is going to go down even further. And so your 7% growth is not even worth being sitting in there, and you're sitting way behind the curve.
You're not pacing inflation. It's like trying to buying a bond right now for 1.5% type of growth. You're not with the current what
bonds.
they tell us.
How do we even have bonds anymore? Put it in a bank account. You get 0.5% bank account. It's like, no, thank you.
No.
With all the technology out there, you have Allied, right? Any of them, Charles Schwab, Fidelity, they all have checking accounts with it. You can write your bills from your checking account.
Yeah.
Just transfer money. You sell your Apple stock, buy it back again. Guess what? You paid your bill. Obviously there's some risk that comes to that, but that's my crazy thesis.
That is a little bit, is it at the cutting edge of, when you start talking about that mindset, you look at the dot-com boom, and a lot of the investment books or at least the few that I've read, talk about that dot-com boom, and you had your people like Jim Cramer and even those people during that time frame, that 98, 99, even in the first part of 2000 that we're talking about, you just can't miss with dot-com.
Throw a dart.
You could just nail it, and it would be 100, 200, 300% type of growth and gain. Is that the type of mindset where, if you're looking at the product that is being produced by crypto, is that a potential downfall? And if you're actively watching it, then obviously you're seeing where this stuff can go and trend. Is that on the new coins? Is that on the your non-BTC or your non-ETH or your non-widely adopted coins,
right.
Or is it more indicative that, hey, this is good time, good growth time, and then we're going to pull out, or it's you got to get out at a certain point in time? It's to be seen, maybe.
Right.
But it's something you always have to be vigilant on. Across all boards, you have to be vigilant on everything. For myself personally, I got too over. When the crash of last year happened and everything seemed to go down. It was an evaluation on my part, looking at where am I currently allocated? What is my percentage in your tech sector? What is your percentage in any other sector? And I was such a heavy tech sector invested person that it really took a hit. It can rebound really quick too in that regard, but it is something that if you were to look at being vigilant on the trad side, if you're looking at being vigilant on the crypto side, how would you look to be vigilant on the crypto side to protect on being over allocated in one certain sector, or is it all just lumped as one sector type of thing?
Right.
You know what I'm saying?
Mm-hmm. Oh yeah, fully, man. I think it's well, like you said, you have to be vigilant. Where are you at? What are you doing? Are you just watching the markets grow and you're just trying to maintain a pace with the market? I mean, as of right now, that could be really good. We'll see. I think we got some fun times ahead of us this year, though.
Well, certainly, and as you're talking about it, you're talking, and I'm outside the know or in the realm of knowing exactly what's going on, but if I was to talk to you about BTC versus what you just mentioned on the DeFi or the NFTs that are out there,
oh yeah,
and those are kind of emerging as well as in the
100%
crypto sphere that I can see, and I'm not fully knowledgeable on all the fronts in that regard, but if you were looking at diversifying within the crypto world, would you look at having X amount in more of your what do you call them, boomer coins that you and Michael Hill are kind of do you have a certain amount allocated to that, a certain amount allocated to your DeFi? Do you have a certain amount allocated to, is the NFT even a sector within the crypto world that you can look at diversifying the holdings within?
I think so, and you don't have to own the NFT to diversify into it, but you can put yourself in the coins that provide NFTs. I've been a big proponent of the gaming industry and NFTs. I feel like if you look at any real industry that can capitalize on this, it's the gaming industry. And the reason is you have in-game purchases all the time. All these games now you don't just buy the game and that's it. Like back in the day, Super Mario Brothers, you plug it in and you play.
Yeah.
You either play the game for free or you buy it, buy the game. But either one of them, they all have downloadable packs that you get extra stuff with it. You get skins, you get this new gun, you get whatever equip that you want to go with it. There's a lot of different things that can go into it. Well, in the blockchain side, they're taking that and they're making those into NFTs, which allows the gamer now to own his game or her game.
Yeah.
And so when I play and whether I spend $0 or, $1 million, it doesn't matter. My time is worth it as well because you earn stuff throughout that time frame. Now, I've spent 1,000 hours playing this game and I've built up this character to be this legendary character. Well, it actually has value that I can now transfer part or whole of whatever it is I've earned on that to earn my money back for the time that I played in it. It's a huge deal that's out there that I think gives the power back to the player and, kind of takes it away from your bigger corporations. And they'll get into it as well, and they'll take their cut. But obviously, Gala Games is I'm big into Gala. I love the team. I've talked with the team there a lot, and I love what they're doing. The amount of games they have coming out. They just had a GalaCon, not this last weekend, but the weekend before that, where they talked about all their stuff that's coming out. They have their node system. They're selling like crazy. Their nodes are. And that's how a lot of these NFTs are dropped out. They're dropped into these node owners, which then can distribute it into the marketplace for play. And then they have 8 games on the docket. They have Townstar, which is out now, which is like Farmville.
Yeah.
And Farmville was one of the largest played games in the world. So talking to Mike McCarthy, he was telling me, he's like, look, Farmville he was one of the developers of Farmville 2, that it's a transcending game across all markets because everybody knows that you have to farm something to make food, or bring milk to make butter into bread, all this kind of stuff that flows in together. It just transcends all markets. So everybody in every country can play this game. So he's like, that game's huge. Like he's full belief that game's going to be the biggest game on their platform because that ability that it transcends there. And, he was giving me the metrics from Farmville and Farmfield 2, and there was another company that came out with a similar one. I can't remember what it's called. But there was billions of players. They have a big MMORPG game, multi-something OR. It's not my type of game. It's like a World of Warcraft type of game.
Dota type.
Yeah, I don't know.
Yeah.
Something like that, where you live in this world. And he's like, I want it to be, Ready Player One type of situation.
Wow.
Like he's like, that's my vision of how he wants to bring this out. And they dropped some of the videos that were out on there. If I had them up, I'd pull them up in here too. Maybe I can find them under Twitter or something along those lines. But they had some pretty amazing. So this is just kind of a quick look at Townstar there. So it's Mirandus is that next game that's big. That and that one won't be released until the end of the year. It's just so big, like the immersion of that world that goes into it. And then you have they're coming out with a tower defense game.
Oh, cool! Those are some of my favorites.
Right? It's like I was talking, and it's been on the Discord. I'm like, look, if you come out with a tower defense game, you're going to take all my Gala. Like I'll spend all my Gala on everything that's there because that's the game that I would play, and I think a crap ton of people do too. So. They're not only just bringing these games out, but they have insane, like great developers. It's called Fortified. Here's the tower defense game. So the graphics that they have coming into it, just the usability. I mean, they have some really, really good developers. They made some really good hires just recently that are like top notch that are coming in there to help create these games. So here's a little screenshot of Mirandus. There was a video that they played through the GalaCon. You can get all this stuff if you go onto their Go Gala Games. Check it out. You can see a lot of the stuff on there. So they had a full video of the immersion of it. It looks freaking cool. So,
well, that's exciting that you're kind of on the inner realm or just on the cutting edge, and it sounds like crypto kind of gives you a lot of that inner realm knowledge on what's new and emerging in the overall differing spheres of. I mean, you have your games, you have your DeFi,
yeah,
and then you just have your traditional or what would you even classify BTC or Ethereum as your boomer coins, or are they just more the standard?
They're
bearer?
Your standard,
standard bearer. And so the boomer coins would be like what your Doge and your.
The Doge is like that's your grandpa coin, man. Doge has been around for a long time, but it's got Doge has Mark Cuban on board, man. Like Mark Cuban, he's going to let the Mavericks, they're going to be able to buy tickets with Doge.
Yeah.
They have, boomer coins. I would look at. I really need Mike on here. He's a boomer expert.
But is that something that
EOS? I'll get you some.
Well, but is that something that when you're looking, or if like an outsider we're looking at diversifying the overall holdings? If I was looking at diversifying my holdings, obviously I'm in the trad market or in the legacy market. I'm I'm heavy tech, but I'm not overloaded in tech like what I used to be.
Right.
Now it's more of a balanced approach, or a little bit more balanced than where I was. I could still be more balanced, I know personally. Is that something that in the crypto sphere or in the crypto world that people are starting to look at the investment grades of all their different coins, but then also where are you allocated within these individual coins? Is it more of the I guess legacy coins of your BTC and your Ethereum? What percentage do you have in that? What's more of the DeFi? What's more of the NFT? What's more of the emerging? What's more of the each one of those classifications?
And if you look at I don't have a boomer coin index for myself. I don't even think I own, although I just bought. I don't know if FET would be considered a boomer coin. It might be. It's been around for a while. Let me look it up here. Let's see, FET. Yeah, we'll call this one a boomer coin. No. 2019. Nah.
Not far enough back.
They have to be 2017, early 2018 to have come in.
Well, they got to go through the BTC crash, right, in order for it to be considered.
Right. It had to be around for the big uptick. So Engine. Definitely. This one's early 2018. Engine is actually a gaming company coin. So this one's obviously had a rip that's coming through there. I personally am heavier in Bitcoin. I think I'm about 40% Bitcoin. I'm really heavy Gala, but that's only because I got them really early and it's had a run up. So I have a lot of Gala. Plus I'm super bullish in Gala. I mean, I just made a big purchase recently, just adding to the holdings. And then I have a DeFi. I have some Ethereum. I just recently bought some BNB, which is Binance. That's their coin. I'm excited about them because they have Binance Smart Chain. A lot of stuff is moving to Binance Smart Chain to run all your DeFi protocols and NFTs and stuff like that. Because right now it's tough to make a transaction on Ethereum. It's like $20 plus, on average right now, when it used to be in the low dollars, even into the cents sometimes, if on a low, when there's not a lot of traffic back in the day. It's unsustainable. Now they have stuff that's supposed to be coming out later this year that's going to help with that, but I think in the meantime you see some of these, in quotations, Ethereum killers that are going to come out. Binance Smart Chain taking away some of the market, ADA, DOT, a lot of these other Ethereum type protocols that a lot of other new coins and systems are being built on. Really big in DeFi. I have a whole DeFi portfolio that I have built out. Inside that, I think that's probably 20% of my overall holdings. So
you got exposure across the board. Then if you were to break it down, you probably say, I'm this amount in the legacy, or your BTC, Ethereum, and then you got your DeFi, you got your how would you classify the Gala coin? Would that be in the NFT zone?
It's 100% NFT zone. They don't get the marketability. They don't apparently in the crypto world. You got to pay for a lot of articles and like your mainstream crypto newsletter type of places that come out there. They want you to pay for their write-ups, and they're just not paying for it. That's one thing I like about them too, is they're all natural. All their volume is like natural volume from the stuff that they're doing, and the kind of deals they're making with other people, like other collaborations.
Nice.
Splinterlands, and they're get onto the Flare network with it's an XRP spinoff. Anyways, so I would consider them a gaming, but you're getting exposure to the NFT world as well in the gaming side.
Yeah.
There's so many different other NFTs that are out there. I may personally buy some Garbage Pail Kid NFTs.
It's a real thing.
I'm not. Yes. Let me pull it up here.
Well, Garbage Pail Kids, those were quite the thing back when we were.
Yeah. So Garbage Pail Kid NFTs, my friend, is
awesome.
Legit. It's the one. I love Garbage Pail Kids, man. I was keeping myself from like really looking at like buying Garbage Pail or NFTs in general outside of, I really like the gaming side, but man, I found Garbage Pail Kids and I was like, oh man. I don't know why, because they have no that's the weird part. It's like you have these cards, right? It's just like in real life, you have a card. Yeah. It's like, oh, neat what it is, but it's just digital, right? Yeah. So, and they have limited. You have your commons, your uncommons, your rares, your super rares. So they have limited amounts for certain ones, and I don't know, man. It's funny, and I think NFTs right now are I feel like they've topped out and peaked in a sense of like it's gotten nuts. It's gotten crazy.
Is it not? Is it at the scale of what, like Beanie Babies, or you know, because that was kind of a huge market for a while. You know, back in physical stuff that you could trade back in the 90s.
Taco Bell made an NFT today.
Oh,
so if that's not telling you that we're like top things in the NFT world, I don't know what is, right? So once Taco Bell gets into the game and they start making their own NFT, I mean,
did it jump the shark yet, or is it really close?
Yeah, I mean, maybe when Lindsay Lohan makes her own NFT, maybe that's the key. I don't know.
You know, when you start seeing old people buy it, like old people like us, right?
Exactly.
I don't know that we're
so.
Considered
I'll let everybody know the day I buy the actual Garbage Pail Kids, then you'll know. It's time to sell everything. No, I think you have the NBA Top Shots has been huge.
Yeah, I saw like what 3.7 million for like a LeBron James or something like that.
It's a great idea. Like they're taking snippets of it, but again, there's a point where it's like, what do you do with it, right? Mm-hmm. Art's kind of cool. Okay, I can do art. Like maybe you know on your TV, you're throwing up your special art collection that you have, you know, in your room, or you have some other things where you can display it and show what's out there, you know, and there's authenticity with the NFTs of, you know, what's the rarity of it. And you can do physical NFTs too. So you can, make your coffee cup over there. It's make it into a physical NFT, and it's only one of one, right? Yeah. Who's going to buy it? Nobody. But there are some use cases with other things out there that could possibly be there. So it's really new. It's almost like when I was talking about the DeFi stuff early on. It's so new and so kind of clunky and weird. And where does it fall? There's some real use cases, but it's so damn early. It's like the pet food online. Oh, I'm going to sell books on Amazon. I'm selling books online.
Yeah.
Well, guess what? That pet food store, I can't remember what it was, or the online pet food store, it's Pets, whatever it was.
Yeah.
It went away.
Yeah.
It was nothing. But now we have Chewy. You know, Amazon. Sure, they sell books now, but they also sell everything else in the world.
Yeah. It took a big crash for them to realize that they need to reassess what their overall business model was, and maybe that's the case here. Is that some of these things are going to go up really big, it's going to blow up really big, it's going to have a crash, and then you'll find the actual use case for it at some point in time. Is it going to happen rapidly? Is it going to take a little bit of time? Who knows?
Who knows, man?
Yeah, but it is something like you said. I mean, you just got to be vigilant on the entire process of everything. You know, you can't be too over exuberant in what you're thinking or where things are going based off of, your investment level. Your investment level shouldn't be at the top of the market. If there's anything that anybody has learned along the way, it's you never buy at the top. I want to think you always wait for that pullback, mindset, right?
Yeah. Except in a bull market.
It's tough in a bull market. Like, if you were to ask me, hey, I'm going to buy at the exact top of February 17th, let's say, of this year.
Right.
I was not a buyer at that point in time, but that's my mindset, is that I'm not buying on an exact all-time high day.
Which you shouldn't, because you're also a longer term. When I say that, for Jeremy, it's more than a month. We're talking long term. Before he's going to sell anything. Don't buy on the very tippy top. Me, I'm different. Like, I've made a good amount of money longing the tops. I mean, I was long before them too, but in margin trades, I was buying tops all day, going up all the way up until this, the 50K mark, and I'm long now from about 47, 46-ish overall as my entries right now. So, but I'll 100% add to it once we get to that 56, 58 mark, and we start to see some consolidation at the top below the top. I'm going to add to that because I feel we're going to be going to 70K. But again, I'll also sell it once we like that long. Like my spot, I'm just holding on for a long time. But that,
and you're long when you talk about that, you're talking about margin, and you're also talking about for month-long time frame.
Right, because you can only in the U.S. you can only actually have a margin trade open for 30 days.
Yeah.
So I have it, in with the crypto markets. It's I'll be sitting in. It should hit pretty close for my original buys in, when I think we're gonna get close to that next top part. But either way we look at it, I'll be taking some profits down the road. So, but and it's trading in and out of it, and I'm not a Binance or I can't even think of the name of them now. But I'm not 100x leveraging anything like that.
Oh, yeah.
You know, my margin trades are about 20% at the high of my overall holdings in the account total.
Yeah.
So I'm safe in that sense. I can't get liquidated. So
Yeah, and you don't want to get liquidated.
hell no. So.
It's no fun.
Well, I think we talked about a lot of things, man. We got some fun stuff out there. You know, hopefully the winter storms are behind us and we can make this another regular thing again. And
that'd be nice. I know that for the 5 listeners that are out there, they're probably...
We have 7, dude.
Okay,
7 listeners total.
I think it's, our little discussions on talking on the variety of different things. I know that more people are probably interested in the crypto world than are not. So
I think we got a new one on the Discord, old S-Bart. You know him from back in our old HBW days.
Oh, yeah.
He was excited about us get our podcast back on. I didn't know he was listening. And he texted me, and I was like, hey, man, no, cool. We got it coming on. I just got to figure some things out. We had a few hiccups going on, but we're there. We got a few people out there, and he's a legacy guy.
No,
so
that's good. There's only a few of us, so I think it's me and then Scott's now. So the 2 Scotts. So
nah, you got Brian. He's on there. Or what is this? Big Teeth. I can't remember. He's got a funny name in the Discord, but he's legacy. I don't think he has any crypto exposure.
No exposure.
No, but he's big biotech. You know, he works in the
Yeah.
medical industry, so he's got big biotech. And the that kind of stuff. So there's quite a few in there. We're good. Spread it out.
Yep.
All right, man.
All right. Peace out.
It was fun.